Hey, welcome back. This is Doug and Brian. Brian, I've got a lot of people asking about capital gains, and where's the point where they're going to get their legs taken out from underneath
Yeah.
them and stuff like that? And so there's some concern there. Take us through capital gains 101,
Okay. What's that? The capital gains,
the nursery
the
version.
there's version, and this is in terms of your primary residence. Okay. So here's the way it works. Let's say 5 years ago I bought this house for $300,000. Right
Okay,
now that thing's worth what? 5 years later, it's worth
450.
it's I was gonna say probably higher. So 450,000 in 5 years, right? So I'm gonna leave all keep it real simple. How much is my cap? I sell this house. What is my capital gain?
150,000.
It's 150,000, right?
Woohoo! I got it right.
Yes, sir. That's your capital gain, and I got to pay taxes. It's income, right? I mean, it's a capital gain. So I sold an asset for more than I paid for it. Therefore, I got to pay taxes on that $150,000, right?
Right.
Wrong-o. Here's the rule: if this is your primary residence,
Is this a Brian rule or is this like a DOJ rule? Or
please consult your tax advisor. But
we're not tax people, but
this is
we
my
did stay at a
understanding.
Holiday Inn last night.
Yeah, we did say that. So the rule is this: if you have lived in the house for 2 years, basically 2 out of the last 5 years, you lived there 5 years, you've lived there the entire time. In this example, then each property owner has a $250,000 capital gain exemption. So let's say this is just one guy, right? One guy lives there, profited, the capital gain is 150, but he has a $250,000 capital gain exemption, meaning the first $250,000 of profit is tax free.
Okay, so with this, a story. So Brian knows my son very well.
Yes.
My son bought a house and was moving out of state. And so Brian was very, very conscious of this. And so when we closed, we were really close to this 2 year mark.
Yeah.
And so we closed at 2 years and 2 days.
We made sure the contract.
Yeah, we made sure that we were over that so that he didn't get hit with it.
Yeah. Yeah. He loves to pay taxes, but I wouldn't let him.
Yeah.
Yeah. So, but that's really what it is. And you don't have to reinvest it in a new house. You can do whatever you want with the money.
Okay.
So it's pretty simple. The old rule was kind of Clinton era is when this changed. So a lot of people think, oh, I have to reinvest it. But that's as simple as that.